They told me I was too pretty for finance. At 26, working as a junior analyst at Goldman Sachs, I was tired of being dismissed as just another blonde who got the job because of her looks. But what my male colleagues didn't know was that while they were busy networking at expensive bars, I was building the most sophisticated trading algorithm anyone had ever seen. Watch until the end. You'll be shocked when you discover how much money I made while proving that intelligence has nothing to do with appearance and everything to do with strategy. My name is Ashley Morgan, and this is how I went from being called just a pretty face to making $50 million in my first year of independent trading. The toxic workplace. Working at Goldman Sachs should have been a dream come true, but it quickly became a nightmare of sexism and discrimination. My supervisor, Marcus Davidson, was a 42-year-old Harvard graduate who made it clear from day one that he didn't believe women belonged in high finance. Ashley, you're obviously intelligent, but let's be honest. Clients want to work with people who look like serious financial professionals, Marcus told me during my first performance review. Maybe you should consider a career in marketing or public relations where your attributes would be more appreciated. The other male analysts in our department constantly made comments about my appearance instead of discussing my work. During team meetings, they would interrupt my presentations to make jokes about blonde moments or suggest that I must have gotten my economics degree through special arrangements. But what they didn't realize was that while they were wasting time on office politics, I was studying market patterns and developing trading strategies that would eventually make me incredibly wealthy. The algorithm discovery. Late nights at the office became my refuge from workplace harassment. While my colleagues went out drinking and networking, I stayed behind to analyze market data and test investment theories I had developed during my graduate studies at MIT. I discovered something that would change everything. There were predictable patterns in after-hours trading that most algorithms missed because they focused on regular market hours. By analyzing international market movements, cryptocurrency fluctuations, and social media sentiment simultaneously, I could predict short-term price movements with remarkable accuracy. Working 18-hour days for 6 months, I built a trading algorithm that could process thousands of data points in real time and execute trades automatically when specific conditions were met. The backtesting results were incredible. My system could generate consistent profits even during volatile market conditions. But I needed to test it with real money to prove it worked. The secret trading account. Using my savings and a small inheritance from my grandmother, I opened a personal trading account with $50,000 and began testing my algorithm with real money. The results were immediately promising. Within the first month, I had generated $12,000 in profits. More importantly, my algorithm was learning and adapting to market changes faster than I had anticipated. The artificial intelligence components I had built were identifying new patterns and adjusting strategies automatically. By month 3, my account had grown to over $150,000. By month 6, I had reached $400,000. The algorithm was working even better than my backtesting had predicted. But I was keeping the success secret from everyone at Goldman Sachs because I knew they would either try to steal my algorithm or find ways to take credit for my work. The Humiliation incident. The breaking point came during our quarterly client presentation in September 2023. I had prepared a detailed analysis of emerging market opportunities that could generate significant profits for our biggest clients. But Marcus decided to use the presentation as an opportunity to humiliate me in front of senior executives and potential clients. Ashley has prepared some interesting research, Marcus announced to the room full of managing directors and potential clients. Of course, we'll need to have our senior analysts verify her conclusions, since she's still learning the fundamentals of financial analysis. Then he made the comment that would cost him his career. Ashley, why don't you explain to our clients how someone with your background ended up in quantitative finance? I'm sure they'd be interested in hearing about your unique qualifications. The room went silent,
everyone understood that Marcus was implying I had gotten my job through something other than merit. I felt my face burn with embarrassment and anger. But instead of backing down, I decided to prove exactly what my unique qualifications could accomplish. The challenge accepted. That evening, I made a decision that would change everything. I transferred $2 million from my successful trading algorithm into a new investment account and sent Marcus an email that would become legendary in our office. Marcus, since you seem to question my qualifications for quantitative finance, I'd like to propose a challenge. Let's see who can generate better returns over the next 3 months, your traditional investment strategies or my analytical methods. The loser pays for dinner at the most expensive restaurant in Manhattan. Marcus forwarded my email to the entire department with the comment, "This should be entertaining. Let's see what happens when amateur enthusiasm meets professional expertise." What Marcus didn't know was that I had already been generating incredible returns for months with my algorithm. This wasn't a challenge, it was a public demonstration of his incompetence. The first month results. By the end of October 2023, my trading account had grown from $2 million to $3.7 million, an 85% gain in 30 days. Marcus's portfolio had gained 12%, which was actually quite good by traditional standards. But the other analysts were starting to pay attention to my results. Word spread through the office that the pretty blonde was somehow outperforming everyone in the department by massive margins. Watch until the end because what happened next will absolutely shock you about how much money one algorithm can generate. Marcus tried to dismiss my success as beginner's luck and insisted that my gains were due to excessive risk-taking that would eventually lead to massive losses. He was desperately trying to maintain credibility while my results made him look increasingly incompetent. The algorithm evolution. What Marcus and the other analysts didn't understand was that my algorithm was continuously evolving and improving. The artificial intelligence components were learning from every trade, identifying new market inefficiencies, and adapting to changing conditions faster than any human trader could. By November 2023, my system had identified opportunities in cryptocurrency arbitrage, international currency fluctuations, and emerging technology stocks that were generating profits at an unprecedented rate. More importantly, I had discovered that my algorithm could predict market movements with 73% accuracy, far better than the 55% accuracy that most professional traders achieved. The money was accumulating faster than I had ever imagined possible.
The department meltdown. As news of my trading success spread throughout Goldman Sachs, other departments began asking questions about my methods and requesting access to my algorithm. Senior executives who had previously ignored me were suddenly very interested in my unique approach to quantitative finance. But Marcus was becoming increasingly desperate to discredit my success. He started rumors that I was engaging in insider trading, using family connections for market information, or somehow cheating the system. His accusations backfired spectacularly when compliance investigators reviewed my trading records and found that every transaction was completely legal and that my profits were generated through sophisticated algorithmic analysis rather than any improper information. The second-month explosion. December 2023 was when everything exploded. My trading account reached $8.4 million, over 400% growth from my original $2 million investment. Marcus's portfolio had gained another 8%, bringing his total return to 20% for the 3-month period. The difference was so dramatic that senior management demanded a detailed explanation of my trading methods. I spent 6 hours in meetings with managing directors, risk management specialists, and technology experts who were trying to understand how a 26-year-old junior analyst was generating returns that exceeded anything in the firm's history. But I wasn't ready to share my algorithm with people who had spent months dismissing me as just a pretty face. The $1 Million Day. On December 15th, 2023, something unprecedented happened. My algorithm identified a perfect storm of market conditions that would create massive arbitrage opportunities across multiple international exchanges simultaneously. In one trading day, my account grew from $8.4 million to $12.1 million, a gain of $3.7 million in less than 8 hours. You're going to be absolutely shocked when you find out what happened next. The trading floor went silent when news of my single-day gains spread through the office. Senior traders who had been working for decades had never seen anything like it. Marcus looked physically ill as he realized that my amateur enthusiasm had just generated more profit in one day than his entire team had made in the previous year. The media attention. Word of my incredible trading success leaked to financial media, and suddenly I was receiving interview requests from Bloomberg, CNBC, and the Wall Street Journal. The story of a young woman outperforming Wall Street legends with a self-built algorithm was exactly the kind of narrative that captured public attention. But the media coverage also attracted people who wanted to steal my algorithm or discredit my success through personal attacks. Marcus gave an interview to Financial Times where he claimed that my results were statistically impossible and suggested that I must be receiving assistance from more experienced traders who remain anonymous. His accusations backfired spectacularly when compliance investigators reviewed my trading records and found that every transaction was completely legal and that my profits were generated through sophisticated algorithmic analysis rather than any improper information. The algorithm licensing offers. By January 2024, my trading account had reached $18 million, and I was receiving offers from hedge funds and investment banks who wanted to license my algorithm for hundreds of millions of dollars. Renaissance Technologies offered me $200 million for exclusive access to my trading system. Bridgewater Associates offered me a position as Chief Technology Officer with a $500 million signing bonus. But I had bigger plans than working for someone else's company. The independent fund launch. On February 1st, 2024, I submitted my resignation to Goldman Sachs and announced the launch of Morgan Capital Management, my own hedge fund that would use my proprietary algorithm to manage investments for high net worth individuals and institutional clients. My resignation letter to Marcus was brief and devastating. Thank you for motivating me to prove that intelligence, not appearance, determines success in finance. My amateur enthusiasm has generated more profit in 6 months than your professional expertise has produced in your entire career. Within weeks of launching Morgan Capital Management, I had attracted over $1 billion in investment commitments from clients who wanted access to my proven trading strategies. The 50 million milestone. By March 2024, exactly a year after Marcus had told me I was too pretty for finance, my personal net worth had exceeded $50 million. My hedge fund was managing over $2 billion and generating consistent returns that made it one of the most successful new investment firms in history. Marcus Davidson eventually found work at a small regional investment firm where his salary is less than what I earn in investment returns every week. But the real shock comes in what happened during my first television interview. The television revelation. During my appearance on CNBC's Power Lunch, host Sarah Chen asked me about the secret to my success and how I had managed to outperform Wall Street's most experienced traders. Sarah, the secret isn't really a secret at all. I explained that while my male colleagues were focused on networking, office politics, and trying to prove their masculinity through aggressive trading, I was focused on understanding market mathematics and building systems that could process information faster and more accurately than human intuition. But then I revealed something that shocked everyone. The algorithm I built doesn't just analyze financial data, it also analyzes the psychological patterns of other traders and predicts their behavior based on cognitive biases and emotional responses. Essentially, I've been using artificial intelligence to exploit the human weaknesses that cause most traders to make predictable mistakes.
The psychological trading edge. What I hadn't told anyone was that my algorithm's biggest advantage wasn't just mathematical analysis, it was psychological profiling of other market participants. By analyzing trading patterns, social media sentiment, and news reaction times, my system could predict how other traders would respond to specific market events. This psychological edge allowed my algorithm to position itself advantageously before other traders realized what was happening. When panic selling occurred, my system would buy. When euphoric buying drove prices too high, my system would sell. The result was consistent profits regardless of overall market conditions. The industry transformation. My success sparked a revolution in algorithmic trading that combined artificial intelligence with psychological analysis. Other firms began trying to replicate my approach, but they lacked the specific insights I had developed through years of studying both market mathematics and human behavior. More importantly, my story became an inspiration for women in finance who had faced similar discrimination and dismissal. I established a scholarship fund for women studying quantitative finance and began mentoring young female analysts who were experiencing workplace challenges. The current status. Today, Morgan Capital Management manages over $5 billion in assets and has generated consistent returns that exceed market averages by significant margins. My personal net worth has grown to over $150 million, making me one of the youngest self-made female billionaires in finance. Marcus Davidson eventually found work at a small regional investment firm where his salary is less than what I earn in investment returns every week. But the most satisfying part isn't the money. It's proving that success in finance depends on intelligence, creativity, and hard work, not gender or appearance. The final message. The lesson from my story is simple. Never let anyone define your potential based on superficial characteristics. When people underestimate you because of your appearance, age, or background, use their assumptions as motivation to prove them wrong through results. Marcus Davidson learned too late that dismissing someone as too pretty for finance can be the most expensive mistake of your career, especially when that person has the intelligence and determination to build systems that revolutionize entire industries. Today, I'm not just successful, I'm changing how the financial industry thinks about talent, diversity, and the power of combining human insight with artificial intelligence. And sometimes the person everyone underestimates becomes the one who transforms everything.